there anything that maybe the heads down trader that is just trying to scrape out a slightly better entry, method for their strategy? Like, is there any maybe upper level things they can be thinking about that maybe can improve their bottom line? You mentioned taxes, like you mentioned, and obviously everybody's tax situations be different, but like, there any other like just above the ground, get your head out of the charts for a moment, make sure you have a couple of things in order to maybe improve their bottom lines? Anything come to mind?
Yeah. If you have a lot of day traders that are listening, which I don't know if you do or not, but for the typical person, we have a cap on how much in capital losses that we can deduct on our taxes. It's $3,000, and then you can carry over for the next year's anything you don't use. But, for traders, they may have a lot more losses than that. And there is a way to be able to qualify for being a trader and having a trading business. And then you can write off your losses against, your gains. You can write off expenses to run your trading business and things like that. But the problem is you really have to be an active everyday trader to be able to do this trading business
Hmm.
strategy. And I, always talk to a CPA and find out if that's something that you can do. If you cannot do that, and you are not a day trader by the IRS's view, then what I would consider is making sure that you're tracking everything very well, tracking your cost basis, tracking commissions, because when you are actually, I know commissions kind of aren't really a thing anymore, but they are. I mean, like, if you're trading on a heavy duty trading platform, there's typically still fees. I mean, I know, like, for my trading platform, I'm still having to pay some commissions,
Yeah, I pay
but
commission
I
too.
don't know about you or other people. But keep track of that so that your gain is smaller and reduced by any commissions or fees that you pay. And then trade in the right account, because, believe it or not, you can trade in an IRA. You can trade in a Roth IRA. You can trade in a traditional IRA. You can do a self-directed IRA and actually um, get access to a really, nice trading platform and be able to trade. Uh, and if you're doing this in the right accounts for your tax situation, that can really, help you, in the long run, because we have many different types of accounts we can be using. We can be using a taxable brokerage, which most people are using a taxable brokerage because they want to be able to access the funds now. But you can actually invest in your IRA, do a little bit of active investing there if you really wanted to. Roth IRAs are pretty amazing if you can get a hold of one, if you qualify, for being able to contribute to one. And I would say that for most people, understand that over trading can affect your wealth big time. And if you find yourself trading too much and the turnover is very high, that typically that can be something that you need to watch out for. Make sure that your strategy is actually working still. Get real with yourself and double check that what you're doing is not going to blow out your account. I try to tell people, just to get real with themselves, so to speak. And it's hard to do. It's kind of hard to do,
Very
but
hard.
it's essential.
Yeah, I love those tips. And yeah, one of the, I think I published a blog post a few years back on the fact that like I love trading my active strategies in my IRA, in my self-directed IRA, because I don't have to pay Uncle Sam a dime on that any, at the end of the year. And it gets a lot of interesting kind of feedback though. And I mean, you're not saying it. I'm not saying it. I don't think a new trader should just go take a full IRA account and just start trading with it. Like, that's a horrible idea. But
Yeah.
if you've demonstrated success, if you've been doing this for a number of years, And now you can start to shift that to a tax deferred account. I mean, you can really compound wealth in a 10, 15-year time horizon with not paying any taxes on that. And that's a huge benefit. Yeah.
Yeah, that's a good point because the thing about a taxable brokerage and trading, you're dealing with ordinary income tax rates, if you don't hold it for a year and a day. So, um, that's something to keep in mind. If you are trying to keep your income below a certain amount, because maybe you want to qualify for certain tax credits, or maybe you want to keep your adjusted gross income under a certain amount for a particular reason, then you want to be careful with taxable brokerages, because if you're a trader, you're likely short term. That's going to be ordinary income. It's going to increase your income. So, and that's one thing. If you can go for long term capital gains rates in a taxable brokerage, that's ideal, right? But traders, they typically are in and out,
Yeah.
and they're not getting that long term cap gains rate. So that's kind of the issue there.
Yeah, yeah. And yeah, I mean I've never traded futures, but I know futures has the benefit too if you're a short-term trader. I know you said you started off day trading futures, but there is some tax advantage, right? 60/40 is
Yeah,
it?
60/40. Yeah. I want to say it's 60 long term gain, 40 short term
Yeah.
gain. You'll
Yeah.
have to double check that.
So yeah, another little hack there on certainly on the taxes side of things. Hey, it's Evan here. I hope you enjoyed this clip from our full-length interview. Don't forget, if you want to hear this entire episode with even more insights from our awesome guest, you can find it by searching the Smarter Trading Podcast in iTunes or on your favorite podcast app. You can also find all of the show notes for this episode by heading to thetraderisk.com/podcast. Thanks for tuning in.